Hello students, today we are covering some special journal entries here in continuation with the last lecture. So in last lecture we had done this different journal entries related to goods, when goods are given as charity, when goods are taken by the owner, when the goods are destroyed by the fire, or it is distributed as samples. So in this when goods are destroyed by fire and those goods are insured, or goods are stolen and those goods were insured, in that case this insurance company, that loss is claimed with the insurance company, and insurance company pays the amount. First of all, we are starting with that. So first of all, when insurance, we will take that journal entry also. When goods are destroyed or goods are stolen, in that case the journal entry is what? Then if it is loss by fire account DR to loss by fire account DR to purchases account. This we have learnt for goods destroyed by fire. If goods are stolen, that also is loss by theft, we will write here. Goods are stolen. Then we claim for this loss, we have to make claim to the insurance company. So for this loss, insurance company, now this loss is not of the business. This loss will be transferred to the insurance company because we have insured the goods, and this loss will be borne by the insurance company. So for that we will just make insurance company DR to loss by fire. Whatever loss is there for claim made for loss. Okay? Second, when we made the claim, that now insurance company is debited, now he is responsible for that and he will pay us for the claim. Now what happens? Now insurance company pays us the amount. When it gave us the full amount, what we will do? We will just write the bank or cash, whatever is there, bank account debit to, now who will give? Now insurance company was debited, insurance company is paying us, so it is the person, so credit the giver to insurance company account for amount of claim paid by insurance company. Okay. Now, if the full claim is not paid by the insurance company, in that case, the part of that loss. So for that, some part which is not given by the insurance company, what we will do? We will, if it is insurance. If loss by fire was of 5,000 rupees, and then we have made claim to insurance company for this 5,000 rupees, and insurance company has given us 5,000 rupees, then this entry. If insurance company doesn't pay us 5,000, it says it is the loss is for 4,000, we'll pay you 4,000. although we have made the this claim for 5,000, but we are getting only 4,000 out of that. So we will write here bank account debit with 4,000, and that 1,000 is the loss. So that 1,000 loss will be debited with what? P&L account, we can say, or loss by fire, we can say, whatever we want to say. So here P&L account also we can write P&L account debit with 1,000, because it will be debited in our P&L account. Or we can also put loss by fire here, loss by fire account debit 1,000 to insurance company. And amount of claim paid by insurance company, and part of, agar it is partially paid, then in that case partial amount, we will write here partial amount here, partial amount of claim paid by the insurance company. This we can do. So this should be the journal entry, okay, for this when goods are insured. Now the next journal entry, that is related to outstanding expenses. That outstanding expenses are those expenses which are to be paid in the current year, but it was still unpaid, remain unpaid. Means that are the expenses for the current year, but that expenses are not paid. So such type of expenses are called that outstanding expenses. So while making the making the financial statements, we show all these expenses of the related to the current year in the current year, reduce it from the current year profits. Here for that we show it for the current year. That's why that if it is the salary, if the salary of 5 persons remained to be paid, so in that case that salary is for the current year, so we will debit the salary here in our books. So salary account debit, but this is not paid. If salary is paid, then general entry is salary account here to cash or to bank, but it is not paid, it remain outstanding. So what we will do, salary account debit, it is not paid, it is shown now, it is debited in the books of accounts, this salary, but it is because it is not paid, so it will remain as outstanding in the books as a liability. So to outstanding salary account. So journal entry salary account here to outstanding salary account for those this salary amount of salaries which remain unpaid. Okay, so here we will write the narration for salary outstanding for the year. And same like that, there may be wages also, then wages account debit to outstanding wages account. And so whatever expenses remain outstanding, which are remain unpaid, so we'll show it here because it should be debited in the books of accounts. So we'll debit it, but it is not paid, so we'll keep it in outstanding, that particular expense. Now come to the prepaid expense. Prepaid expenses. For prepaid expenses, as we have already stated, that prepaid expenses are those expenses which are paid in advance, which are not related to the current year, that related for the next year, but we have paid it in this year, in advance, that is paid. So for that, what we will do here, we will just, because it was paid while paying the expense, like insurance for the next year also we have paid. Okay, so here we will write insurance if we have paid for the next year. So insurance account debit, at the time of paying we will write this insurance account debit to cash or bank, whatever it is. Okay, and if it is 5,000, 6,000 rupees we have paid here in the middle of the year, and that in the middle of the year we have paid 6,000. So insurance is for generally for one full year. So means it was for the current year, half amount is for current year and half for the next year. So in that case, this earlier we had shown it insurance account here to cash 6,000, and if we have done this entry, then for insurance paid, so then we will have at the end of the year we will have to put this one more entry for this to show that half part is related for the next year. So we will, because we had this debited the full amount here, insurance expense, insurance premium account debit, we can say insurance premium account debit for 6,000 full, which was actually not related for the current year, half of which was related with the current year and half with the next coming year. So in that case, what we'll do, this insurance account that was by mistake was done full amount for the current year. Now we will reverse this entry. Insurance was debited earlier with 6,000. So to rectify this, we will credit the insurance. Here we have debited with 6,000. If we'll credit it with 3,000, then automatically it will this rectify the thing. So here insurance debit to insurance premium account, that is 3,000 rupees, and what will be debited here? Prepaid insurance. So here prepaid insurance account debit to insurance premium or insurance account, we can say whatever we want to write. Insurance account 3,000 rupees. This should be the journal entry for amount paid in advance. Okay? Or if we don't want to put these two journal entries, we can make only one journal entry at the time of paying only. So in that case, what can be done? Here, instead of writing this insurance 6,000, we can write here prepaid insurance account debit with 3,000 for the insurance for the current year, 3,000, and to cash 6,000. Now there is no need to write this entry, because this prepaid already shown here. First this insurance account debit, prepaid insurance account debit 3,000 each, and then 6,000 with the credit with the cash or bank account. So this journal entry can be given. Then comes the okay. Now we'll take some more these special journal entries in our next lecture. Thank you.